You ever notice something weird about the stock market? Like, really think about it for a second. It's basically the only store in the world where, when prices drop, people don't rush in to buy. Instead, they run away. Fast. Now imagine this. Your favorite store announces a 50% off sale. Everything you love, half price. What do? You don't hesitate. You grab a cart and go wild. You stock up. You brag about the deals. You might even post it on social media. But when the stock market offers the same kind of discount, people don't celebrate. They panic, they sell, they assume something must be terribly wrong. It's like a fire alarm goes off in their brain, and they just want out. But here's the thing, they forget the golden rule of investing. Buy low, sell high. It sounds simple, right? But in practice, it's anything but. Because when the market actually hits those lows, it doesn't feel like a buying opportunity. It feels like danger, like you're walking into a burning building. So let's break this down. Why do people react this way? When the market drops, it's not just numbers falling, it's emotions crashing too. Fear takes over, doubt creeps in, regret starts whispering in your ear. You start thinking, what if it drops even more? What if I lose everything? And suddenly, instead of seeing a discount, all you see is red, and red means stop, so you freeze. Or worse, you sell at the bottom. But here's the twist. The smart money, the pros, they wait for these moments. They don't fear the drop, they prepare for it. They keep cash on the sidelines, ready to pounce when prices fall. Because they know something most people forget. Fear creates opportunity. When others are running scared, they're buying assets at a discount. Warren Buffett said it best. Be fearful when others are greedy, and greedy when others are fearful. That's not just a clever quote, it's a mindset shift. But here's the catch. Living that mindset takes serious discipline. You've got to rewire your brain to do the opposite of what it naturally wants to do. When your instincts scream sell, you need to pause, breathe, and think long-term. You have to stay calm when the headlines are screaming panic. That's not easy, but it's what separates investors from speculators. One thing that helps? Zooming out, literally and mentally. Look at the market over 10, 20, even 30 years. It doesn't just recover, it grows. It builds wealth. Not in a straight line, of course. There are bumps, dips, even crashes. But the overall direction? Up. Every crash in history has eventually been followed by a recovery, and often, a new high. So when the next market sale comes, and it will, don't just react. Remember, the fear is temporary. But the opportunity? That's how fortunes are made. Wealth isn't built by following the crowd, it's built by thinking differently. So stop thinking like a shopper, start thinking like an investor. Because the stock market, it's just another store. And the best deals? They show up when the aisles are empty. That's when the real buyers step in. Quietly, confidently. If this shifted your perspective, even a little, go ahead and hit that subscribe button. There's a whole world of financial wisdom waiting for you. I'll see you in the next one. Until then, think long-term, stay calm, and buy the dip.